Hello, welcome to Help a Business Out. My name is Rea Hailley, and I'm the co-founder of New Idea Machine. Today, my guest is Carla Smith from The Long Lever. She helps founders find hidden money vampires and the root cause of chaos in their business. Carla is not just a founder, she's actually started two businesses of her own, one online solo venture that she grew to six figures, and one brick and mortar which she grew to seven figures with 50 staff members. She's also spent the last 2 years as a business coach to residential builders. Today, she's breaking down the top 5 money vampires that are sucking away your business profit. Welcome, Carla, and thank you for being my guest.
Hi, Ria. Thank you for having me.
My pleasure. Okay, Carla, tell us about your experience. And, you've worked as a business coach for quite some time.
Yeah.
Tell us about your journey that brought you here.
Yeah, absolutely. Well, I had the opportunity after I stepped away from entrepreneurship to take a bit of a break from that and get employed as a business coach. So I got to put together my experience as an architect, which is how I started my career. So building industry knowledge with entrepreneurship knowledge and work for a company that helps residential builders to be more successful in their businesses. So in doing that, I worked with a lot of members one-on-one as well as others in group settings. I probably conducted about 1,600 one-on-one coaching sessions over 2 years and change. So that's a lot of time spent. And every time I'm looking at someone's monthly profit and loss statement, I'm looking under the hood and looking at their balance sheet, their cash flow. So that really gave me an incredible view to see what are these patterns that so many business owners are making. Now, obviously, this is in one industry, construction, but business is business and the financial fundamentals are the same or correlated no matter what, right? No matter what kind of business you're doing. So, some people think, oh, my business is a special snowflake and it's got this one special problem and that's what makes us unique and that's what makes us, challenged to succeed here. And what I've been able to see is that really the problems are almost universal. It's not that everyone's making all of the same mistakes, but if you're having trouble with your finances, if you're struggling and not making the profit that you intend and hope to make, chances are you're making one or two of these sort of top 5 big blunders that we'll talk about today.
Fantastic. Okay, let's dive right in. So tell me, what's the first money vampire?
So the first one is ignoring or misunderstanding gross profit margin. Okay, so said a different way, fancy terms, you might say unit economics. So if you were selling t-shirts, you have your cost of goods sold, right? That's the blanks and that's the ink that goes on them. And that's maybe the packaging that they get shipped out in and the human being that does the screen printing, right? In business, depending, in other types of businesses, in a construction business, obviously your cost of goods is all the lumber, the materials, the sub-trades that you pay for, all that kind of stuff. And then you mark that up and you charge it to your client. And then if you're an agency or you're a solo provider, say a knowledge provider, then maybe your cost of goods is just your time and your wage that you hopefully pay yourself, right? But misunderstanding that or not paying attention to it and understanding what your gross profit margin is the first step to never making any money ever,
Yeah.
right? So it's sort of the basis of pricing, but also understanding what's our route to profitability, our overheads appropriate for how much gross profit margin we can get. And just to make it super clear, so we're not using jargon here, the gross profit margin is the percent of your top line revenue that's left over after you've paid for those cost of goods, those cost of sales.
Mhm.
So in my t-shirt example, if you charged someone $20 for the t-shirt and it cost you $10 to make and package and print the t-shirt, then you would have $10 left over, and $10 is 50% of 20. So you have a 50% gross profit margin. So the key here is if your gross profit margin is 50%, we need to make sure that your overheads aren't 55% because then you'll be losing money every single month.
Yeah, yeah. And do you find that people are often marking up their services or products enough? Like their margins are too thin?
It's a common challenge for sure. And pricing is a whole big discussion, right?
Yeah.
In certain industries, it's very competitive and people feel like it's fixed. Well,
Mhm.
everyone else in my town only charges a 15% margin or a
Yeah.
15% markup. And so I can't charge 16 or 20. And that's a fallacy as well, because we can do things to position you so that you're not competing exclusively on price.
Mm-hmm.
But in the knowledge economy, it becomes even more sort of wild west, because there's not oftentimes a real clear anchor for how you're pricing things.
Mm-hmm.
So especially women, and especially new founders who are starting out in business, it's very common to underprice your services because you're just so afraid that no one will say yes if
Yes.
you price appropriately. Right.
Yeah.
But I like to start with like, okay, where are we trying to get to? How much do you want to pay yourself? How much do you want to earn? How much profit do you
Mm-hmm.
want to have? And then let's look at the math and see, well, what does that look like? Is that 10 clients paying 10,000? Is that 10,000 clients paying 100? What does that look like, right, to get
Yeah.
there? Yeah.
Yeah. That that's such an important thing to point out. It's very easy to try to compete on price when you're nervous about getting sales, but you also attract the wrong people
Mhm.
when you do compete on price. That's been my experience anyways. And if you're offering something that's truly unique that, is not common in your industry, then you certainly can set your price and not worry about what everyone else is doing because you like you said you've differentiated yourself so well.
Mhm. Mhm. There's definitely space to build up to the price that you intend to charge for yourself, especially if you're
Mm,
brand new. I'm coming at this from someone who's stepped away from that business coaching job and started my own coaching strategy consultancy very
mm,
recently. So I'm in that startup mode, right? And so I'm thinking along those lines. But there's certainly room to say, okay, for my first 5 clients, I'm going to charge this amount. And then once I fill
yes.
that block up, my next 5 clients, they're going to go up, right? Because you need to make some cash. You need to get the ball rolling, but
Yes.
you need to be setting your target at where you need to be and what your goal is, and keep that top of mind. And every now and again, you have a conversation with someone and you just go ahead and float out that next higher number and see how that lands.
Yeah. 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 That's a very good advice. Okay. And what about the second money vampire?
Okay. So this is related to the gross profit margin piece, but it's setting up your profit and loss statement, your QuickBooks
Hmm.
P&L or your zero or however you're doing it, setting it up correctly so that you can actually see your gross profit margin correctly. So again, if you are a knowledge worker and you work on your own and you're a bookkeeper, you're whatever, then you really should put your time that you spend. Let's say you spend 80% of your time doing people's books. This is me being a bookkeeper. And then 20% of your time prospecting and going after and doing your own books and doing the admin of the building and marketing and whatever.
Yeah.
Then 80% of what you're paying yourself should live up there on the profit and loss statement, right under revenue, cost of goods sold, your wage, and then there will be a line that says gross profit, and then you can calculate your gross profit margin. And of course, if you are in an industry where there's actual hard goods, let's say you have a gutter cleaning service. Okay. So you've got, 4 vans that run around and 2 people in each van, and they get up on ladders and they clean gutters, and they have supplies and time and trucks and all these kinds of things, right? The trucks are probably not a cost of goods sold. That's probably an overhead to the business. They exist whether the clients are there or not. But those staff people and those gutter cleaning materials or whatever would go away if the clients all went away, right?
Yeah.
So all those things that are specific to that job that would get spent only to do that client's job, those need to be held up there at the top of your. I'm looking at, I'm making a visual of your profit and loss statement. They need to be up there above your overhead expenses in the
Mm,
cost of goods sold so that you can accurately calculate your gross profit margin. The other reason for that is having all of your overheads correctly in one place. And that might be, again, a portion of your salary if you are partly a service provider and partly the business owner strategist type. And maybe you're a marketing person, you're a virtual assistant, your office admin, you're a bookkeeper, your, marketing, education, all the things, your website, blah, 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 all the things that keep your business running. Those are your overheads. And if you can't accurately calculate what are overheads versus what are cost of sales, then you can't calculate your break even number, which is, hey, we need to bill at least $8,000 a month, 50,000, whatever it is,
Yeah.
to keep the lights on in the business.
Yeah. That's so important. And I think now, if somebody doesn't have their own bookkeeper yet, they can likely take what you just shared, plug it into an AI tool, and then
Yeah,
have them, have the AI tool help them identify
absolutely.
what that number is. And it's so
Absolutely.
important to know so you're not flying blind.
Yeah. And if you're not sure if an expense in your business is an overhead or a cost of sales, then you can ask yourself the question again, like, let, you know, pandemic, all the clients go away. What goes away? What do we stop spending on?
Mhm.
Right? Those are your overhead. Those, sorry, reverse. Those are your cost of sales. All
Yeah.
right. And what do we still have to pay for? We still have to pay for the website. We still have to pay for our insurance. We have to pay for the software that runs all the projects.
Yeah.
Right. And so so that's kind of the my sort of key, question to answer, to tell which section does it belong in. But to your point, you could ask Claude or Chat GPT and you could say, hey, look at my statement. Which one of these do you think should be, ask me questions about it and help me figure out if it should be a cost of sales or an overhead.
Yeah. Yeah. Fantastic. Okay. And what about the third vampire?
Okay, so this one is creative owner compensation.
Okay.
So creative can be all sorts of things. Many business owners who have been in the game and they've got a going concern and they've got customers and staff and things, they're working potentially with a tax advisor or, personal financial planner, and they're doing certain strategies to reduce their personal income tax burden. And this could look like paying yourself through dividends in your business
Mm.
if you have a corporation, for example. Or it could also be paying yourself through shareholders' loans. So that looks like, hey, when I started up my business, I put $50,000 in to have cash in the bank. And then I start paying myself my monthly wages as paying myself back that shareholders loan.
Mhm.
That's all fine. But I would suggest, oh, and the third creative thing is not paying yourself at all,
Okay.
right? So startup businesses or businesses that haven't found their feet and are still struggling, typically the owner, gives himself a wage cut and says, well, I'll start paying myself as soon as we start making some profit.
Yeah.
So the problem and the challenge with this, look, there's nothing wrong with trying to minimize your tax burden personally, but there's an argument that says for every, 20 cents on the dollar that you might save on your tax bill, by not correctly accounting for the cost of running the business, i.e., your wage,
Mhm.
you will lose so much money because you won't go after it the way you should. You won't go out there and earn the money that it costs to run a business. So again, if you're a new founder, if you're starting out, there's time to grow into the wage that you should be earning, and that's
Yeah.
okay. But you one of the biggest things you could do to earn more money in your business would be to put yourself as a line item and say, what would I pay someone off the street to replace me if me and my family decided to move to Bali forever or whatever
Mhm.
wonderful thing you decided to do, right? You should aim to pay yourself that because and so many reasons around that, right? So the
Mhm.
first reason, like I said, you'll go out there and hustle to earn that money if the business is paying that out, and you will show appropriate revenue if you decide to ever sell your business. It's going to
Yeah.
look like a real going concern. And then at the end of the year, your accountant can do a little gymnastics and move that money out of your profit and loss, like move it onto your balance sheet if you want to do some creative gymnastics and make it all dividends or
Yeah.
whatever. But on a month to month, week to week basis, I'd love to see you paying yourself what you're worth and showing it on the books. And again, to
Yeah.
the point about the gross profit margin and getting your P&L lined up, make sure if you're a service provider that the part of your time that you're providing service to your clients, you just can you can ask your bookkeeper or you can do it yourself. You just kind of do a little journal entry with that line item and say 80% of it goes to cost of sales, my wage, and 20% of it goes to owner's compensation in the expenses.
Yeah. Yeah. And I recently learned, and it's so valuable for people to just go out and have a conversation with accountants or or financial experts like yourself, Carla, because like I recently learned that you don't have to decide what amount is wages or dividends till the end of the tax year.
Yeah,
So
exactly.
that gives you a lot of wiggle room. And then, you
Mhm.
could talk to your financial planner or sorry, accountant or financial expert and say, okay, well, how should I do this? Like
Yeah.
how can I minimize my tax that I have to pay and still have an income?
Yeah. And a lot of people, to your point, would really benefit from having that conversation because that planner, that person is going to ask you the right questions or should ask you the right questions about your goals.
Yeah.
Because let's say you've had people around you in your life who are entrepreneurs and you've heard, oh yeah, this is when you're a business owner, then you don't pay yourself a salary, you pay yourself this other creative way so that you save. But what if you're trying to buy a home?
Yeah.
What if that's on your goals list? Then you need W-2 wages because it's, speaking from experience, very challenging to get the people to believe you that you can pay your mortgage, even though you've paid your rent for a million years.
Yes.
But yeah, so there could be other reasons which would benefit you to have a W-2 in Canada or a, T4 in America wage coming in that actually shows up to the old CRA IRS and shows you like a going concern so that you can go ahead and get some lending happening
Yes,
personally.
yes. And it's my understanding too that the first about $18,000 that you make as a wage is tax free. And then the rest
Mm.
could be
Mhm.
paid out in dividends, which is also fantastic.
Yeah, yeah, for
Okay. And
sure.
what about the fourth vampire?
Okay. So this one is for people who price their services based on a markup of a true markup of what it costs them to do. Okay. So that's
Uh,
my gutter cleaner example, or my builders, or people like that, people who are selling like a physical product, obviously, a skin cream or t-shirts. Right. So there's a very simple math error that could be costing you hundreds of thousands or even millions of dollars if you're making it when you're creating your pricing. And it's that markup and margin are not the same.
hmm,
Okay. So if I mark up my product 25%, okay, it's going to cost me $100 to make this thing or to provide this service. And so I'm going to charge my client 100 times 0.25, $125. My profit on my gross profit on that single sale is $25. And
mhm.
$25 over the total 125 that I sold it for isn't 25% gross margin by
Right.
math. It's 20% gross margin. It's 1/5.
Mm.
So in a margin tight business, which let's be honest, every business is a margin tight business, some more than others, giving away 5% of your what you believe to be your gross profit on every sale could absolutely kill your business without you even realizing that you're doing it. You're going out there going, I'm making 25% on every widget
Yeah.
I sell.
Yeah.
But no, you're not. You're only making 20%. And that 20% that's left over, that gross profit margin has to pay. Okay, we sold our thing for 125. We got 25 left over. That's 20%. That 25 bucks has to pay for your overheads. Let's hope they're only worth $13. And then there's $12 left for your net profit. That's what you put in your pocket, your earnings at the end of the year. And guess what? That has to pay your taxes for the business, and it has to pay your debts for the business, and it has to pay some other sneaky things that don't show up on the profit and loss.
Yes.
You gotta have 12 bucks left there at the end. Otherwise, you get zero. Right. So
Yeah.
so that margin versus markup misunderstanding or lack of clarity for people, you
Mm.
can see how it could cost you so much. So I had a client that I was working with, one of the builders, and he was kind of in his mid to late 60s. He's looking at, selling the business, retiring, and he wants to get it working and churning for him and earning a bit more profit and
Mm.
leverage before he retires. And we discover that he's been making this math error in his brain personally this entire time. So he's been marking
Wow.
stuff up 20, which means he's only earning 16.7%. And we did some quick back of the napkin math. And over the 35, 40 years he'd been running his business, we just quickly calculated that that was probably $2 million in profits that he had not earned, that he could have earned had he just put that price on the quotes instead of putting the reduced price on the quotes.
Yeah. Oh, wow. That's a huge mistake.
So the good news is we had a good laugh. We had a good laugh about it,
$2 million
Water
laugh.
right, can't go back.
Yeah.
But oh boy, so yeah, so it can be really transformational to understand that difference.
Yeah, no kidding. Holy wow. Okay, and the fifth, the last money vampire?
Margin erosion.
Okay.
Okay, so once you've gone out there and you've earned the money and you've calculated your margins and you've made the sale, good for you, you've paid yourself, whatever. But we lose a lot of our potential gross profit on a client, a project, a product through mismanagement of delivery,
Mhm.
right? So, fitness company example. That's my background, right? So I operated a niche fitness studio, community and event space. And so our margin was based on sort of utilization, right? So if we had, with so many members, if we were running so many classes a week, if we had a class that has a coach who's paid an hourly rate to coach that class, and then only 4 people are signing up for that class every week, then we have to ask ourselves what's going on, because that's underutilized,
Yeah.
right? And so the margin is slipping away. We need the margins to be really tight for a high real estate cost business, right? Where our rent costs were super, super high. So that's just one example, but maybe if you're an agency, let's say you're an interior design firm or you're a marketing agency, this is one where the pricing really comes down to you knowing or believing you can provide the products that the client needs in a certain amount of time with a certain number of person hours put into the delivery, right? And that can erode so quickly, and it erodes through scope creep. Hey, one more revision. Hey, one more revision. Or like, ooh, we just decided we wanted to add, a party room at the back, whatever, right? Like new stuff that wasn't in the original brief. And then if we're just doing that for free without charging a change order, without charging, an addition, then we're just working for free, right? And so
Yeah.
then whatever your margin was, whatever profit you thought you were going to earn on that project, it just sort of dwindles away if we're not careful, if we're not paying attention, if we're not tracking labor against target every single week on a multi-week project. It can get away from you really fast if you're not managing that erosion of margin.
Yeah, no kidding. Wow. There's a lot for a business owner to stay on top of. I'm very fortunate because we have a bookkeeper and an accountant that takes care of
Mhm.
all those things, so I don't have
Mhm.
to worry about that. Not the actual accounting part. I just have
Mhm.
to look at the numbers. But yeah, there's definitely a lot for people to consider. If somebody wants to get your help, Carla,
Mhm.
how can they reach you?
You can email me, Carla at thelonglever.com, and Carla with a C. But my website is there as well, thelonglever.com. There's a form there you can fill in if you want to do a deep dive diagnostic with me. So I love to do free diagnostic sessions with people. I really enjoy helping people kind of peel apart what's the underlying issue behind their challenge and see where they can find some success.
Oh, that's fantastic. Okay, we'll include that in the show notes as well. Anything else that you wish to, impart before we wrap up?
Well, I think the key with those 5 money vampires that I've shared today is that you could earn, depending on how much revenue you're earning per year, right? We're talking in percentages, right?
Yeah.
But what if you earned 2 or 3 or 10% more gross profit, which turns straight into net profit if you don't then spend it on growing your business? What would that look like? Because you could do that by solving those 5 money vampires really easily. Imagine if you just earned 2% back by doing each of those things. That seems pretty reasonable, right? So if you
Yeah.
got 2%, that would add up to 10% gross profit margin, right? You could do that without adding a single additional client
Hmm.
and without raising your prices, right? So if you've screwed up the margin versus markup piece, then maybe you need to raise your prices. But
Yeah.
literally, all of those things can happen without additional hustle,
Yeah. Yeah.
right? So I think that's freeing, right? Like that's exciting. Like, oh, dang, if I kind of get my financial house in order,
Mhm.
then I could be earning this much more money without having to spend more on marketing, without having to do more quotes, without having to serve more clients.
Yes. Oh, wow. Yeah, and who doesn't want that, right? Lighten
Free
their
money.
workload. Yeah. More money. Sounds good. Sign me up.
Yeah. I guess the only other thing I would say, Ria, is that in my business at the Long Lever, financial is one of the things that I talk about because it's the underpinning. It's kind of the engine, the gas that keeps the engine running, right? But I work with founders in all kinds of areas as well. So I work on their vision, their accountability for their team, making sure everyone's, rowing the boat in the same direction. Everybody understands what the mission is, job descriptions, accountabilities, KPIs, helping people set those kinds of things up, and then systems as well. So I'm a very systems oriented person. So whether that's a client acquisition system, aka marketing and sales, or whether it's a back end operations system, how does this work in the business? How can we make this automated? How can we make this simpler? Or whether it's a financial system. So yeah,
Fantastic. Fantastic. You're the one-stop shop.
I'm a little Swiss Army knife of
Yeah.
business information help.
Yeah, that's fantastic. That's wonderful. Well, thank you so much for joining me, Carla. And thanks everyone for tuning in. And if you have any questions, please reach out to Carla. And if you'd like to be a guest on Help a Business Out, please reach out to me. Thanks, everyone.